In the metals market today, gold rallies up, retaking the 50-day moving average. If you remember yesterday, it tested it and failed after closing below the 50-day for the first time since last December, Friday afternoon. And now today it retakes that level, gets back above it. We put in a low of 1480.50 today, and then it rallied since then, getting back above 1500 and closing near the highs today. A global sell-off in equities is the reason stocks across the globe fell. The only major market that ended up higher today in terms of change on the day was China's Shanghai Composite Index, which ended up 11 basis points. But a lot of the news happened already after that close, so it's likely to continue lower tomorrow if nothing changes, if all else is equal. Markets like Russia, the FTSE in the UK, EU stock 600, the Dow, the S&P, the NASDAQ, Mexico's stock market, all the major indices all ended up negative. This global sell-off helped to push gold higher as you end up being in a bit of a flight to safety. And that's part of what we're seeing here is a global flight to safety based off of the sell-off in the stock market. Also, the dollar is stable. Now, we have that sort of inverse relationship with gold and the dollar that I always talk about, but the rate cut probability with this sell-off has jumped. 2 days ago on the CME Fed Watch tool, the rate cut probability was about 40%. It went to over 60% yesterday. Today it got above 76% probability of a 25 basis point rate cut in October, and that did not push the dollar much lower, 7/100ths of a basis point in the dollar. So that's essentially unchanged. And when you look at the chart in terms of change on the day, meaning the open to the close, it is actually higher, but it's lower than yesterday's close. So the dollar we'll call overall stable. That shows again this entire move in gold today is a flight to safety trade rather than some sort of fundamental change in the outlook for the precious metal.